Good morning and welcome, Patriot News Hour. Joe and Jason on this Thursday. I hope it finds you well out there. Yeah, the Olympics wrapping up. I think, we got a few more days and then back to nothing but baseball. How about those D-backs? Yeah, we're red hot. Yeah, we're excited again. It's always good to have a distraction, especially in the year of chaos. And I just, as we watch all of this play out, yesterday we had a rally that fizzles. Today we've got another rally. Let's see if that fizzles. We had a horrible auction again yesterday. And this is kind of the thing, right? Everybody's trying to figure out, okay, how do we convince ourselves that all of this debt isn't going to come back to haunt us? Jamie Dimon talking recession. We had jobless claims today. Kind of, really for this year, kind of a boring week, right? Kind of a boring week. I mean, we had the excitement of Monday with Japan, and then, of course, the very next day they're like, okay, we were just kidding. We're not gonna defend our currency. Of course, they can't, but it will pick back up again next week, but we do have action going on today. Our toll-free number, 800-951-0592. The website at allamericangold.com. And speaking of gold and silver, gold now squarely back above 2,400, up over $30 this morning. Silver also higher, 75 cents, $27 and change. The Dow's on the move. We had 233,000 people file for unemployment claims. That was lower. Last week's got revised higher to 250. Remember, it was 249. But we had some squirrely data again. Last week, the bigger problem was a lot of people from the hurricane in Texas coming back. This week, it was the auto guys. So every summer, the auto guys take 2 weeks off. I guess they get, what a great deal that is for the auto companies. Not such a great deal for the employees, but hey, we're shutting down for 2 weeks, and all of you guys got to go file unemployment, and then we'll hire you back, I guess. I don't know how that works. It's a good little trick, but Michigan, a big subtractor. So was Texas. So not as much as last week. So I guess, Jason, will probably need one more week before we decide exactly where these jobless claims really are. And the interesting part is the continuing claims. That's kind of what we're watching out for in these continuing claims. It was a new high, almost a 3-year high on the continuing claim. So it was kind of like, well, gosh, if you lost your job, you're having a hard time finding a new one. As far as the I guess the data points out, we'll continue to watch. But 233, I guess Wall Street liked it. We had a bad auction yesterday. The 10-year note today back above 4%. And I think everyone's just trying to figure out, okay, how big's the slowdown, right? How big is it? Is it we're still not in recession slowdown? Is it a soft landing slowdown? Or is it another one of these crash slowdowns? And quite honestly, right now, I don't think anybody really knows.
Well, Joe, and I haven't mentioned it in a while, but the unemployment numbers, I think, today are harder to read than they've been in decades past. Because, imagine in the Depression, you got a guy who's been fired and he has no job and he's trying to find a place to live, find ways to buy food to eat, right? And if he does the farmer says, hey, I need you for 1 weekend. I'll pay you for the weekend to do one job for me, right? Did he suddenly become unemployed status? Was he employed for that 1 weekend? No, he made a few bucks. He paid for some food and some necessities. and he continued on with his jobless situation. I think with so many people working part-time jobs that aren't getting ends, making ends meet, but they're considered employed, right, Joe? I think that's why you're seeing all these store closures you've been reporting, all the other numbers that seem to be getting worse and worse, because you can't feed a family and pay for what you need off of one part-time job if your other two part-time jobs got rid of you, right? So I think the numbers underneath are much worse than what we're seeing, and I think it's going to catch a lot of the markets are going to be very surprised how bad it gets, how quickly once it starts to move, Joe.
Well, that's going to be the key. It's going to be how quickly things happen and what are all of the consumer slowdowns going to be. Like I said, these continuing claims getting a little worrisome now. 1.875 million, the highest going back to 2021. Taking all out the noise, the 4-week moving average also higher. But I'll say this, it'll be interesting on this unemployment rate because of the hurricane and because of Michigan with the auto workers. So we'll have to wait and see. I think this is something where the data today kind of says, well, gosh, maybe the Fed shouldn't cut rates. I don't know. We'll see. We got a lot of time. It's going to be interesting what the inflation data looks like as well. Patriot Radio News Hour when we return. What happened at the 10-year auction yesterday? 800-951-0592. Patriot Radio News Hour. Joe and Jason here on this Thursday. A quick look in. The Dow's up 500 points. It was up 500 points yesterday until it wasn't. In the afternoon, a brutal 10-year auction actually sent the Dow down 250 points. Oh, 700, another one of these big moves, another 750-point move. Today already we got up 500. Volatility, always one of those warning signs, right? That's one of the things when we look at when it's day after day after day after day where we have this volatility. The S&P's up 84. The NASDAQ's up 300. Again, we saw this yesterday until we didn't. The 10-year note, 4%. Man, what a move on the 10-year note just this week alone. I mean, we were down to 3.7 on Monday. Back to 4%, most of that occurring yesterday. Like I said, more trouble in the Treasury markets yesterday. Oil's up 70, back to $76. Gold's having a strong day right now, up $28, $2,413. Silver's up 72 cents. $27.32. The Japanese yen weakening again now. We'll see. We'll watch where the next spark is going to be. Don't be fooled here. You're getting a chance to get yourself right before the bubble bursts. And this is what the market will do. You can't say you didn't have warning. Oh, I didn't know, right? Because we always say, hey, it's gradual, and then all of a sudden it happens. Well, before all of a sudden, you always, you get these blips. We've been seeing more and more of these blips. Get diversified. Add to your gold and silver holdings. Check out our friends over at YRefi. Right? Why do we like YRefi? Because you know what? They can offer great fixed rates of return. That's always good. Right? Lock it in. Fixed rate of return, not correlated to Wall Street, not correlated to the Fed, doesn't care about the Japanese economy, the U.S. economy. It doesn't care about those things. Up to 10.25%. And you know what else is cool? They don't play any games. You can use it as income. You can turn it on. You can turn your income off. You can compound it. You get to decide. If you want your principal back early, they never attack it. What does that mean? You get it all back. You know, when you go and you do these annuities and all this stuff, well, something bad happened. I need that money now. They're always whacking with these huge penalties. Not why refi. They don't play that kind of games. InvestYRefi.com. That's the word invest, the letter Y, REFY.com. Or just call them at 888-YREFI24. And you guys know, got to have a minimum of $50,000. You can use existing IRAs. You can use excess money in your bank account. Some of you can use 401ks. But get smart here. Understand what really is happening. When we looked at what happened yesterday, we had this great rally. And then all of a sudden, the market turned south, and it was all due to a weak 10-year auction that turned really, really ugly. So the 10-year auction, by the time the Treasury filled it, so you got to remember, how do these auctions work? They're blind. What does that mean? That means everybody just puts their bid in. Hey, I'll buy X billion dollars, and I'll buy it at 3.9. I'll buy it at 3.2, 3.3, 3.4. And it goes, and obviously as the government goes, hey, we're going to fill the ones that want the least amount of interest, right? That's just good sense, right? That makes sense. Hey, listen, if I've got debt, I want to sell it to the guy that's going to make me pay the least. So you start filling orders. Whoever asks for the least amount of interest, they get it first. And then you go through the progressions until you finally sell it all. Well, guess what? It went all the way to 396 yesterday. So another one of these, we talk about, this is called a tail. Tails are bad. So just think about it like a coin flip. Heads are good, tails are bad, okay? Tails, not good. The bid to cover, the lowest in almost 2 years. What does that mean? Well, that means there wasn't that many bids, right? Remember, we talk about bids, right? This is blind bids. And they were saying, hey, you know what? Gosh, there just wasn't that many people there. Now, the indirects took down 66% of it. Okay, that wasn't horrible. The directs, well below average, only took down 16%, leaving the dealers, once again, with almost 20% of these auctions. And Jason, these are the guys that get paid to run these auctions, and they're being forced to buy more and more of these treasuries. And the question is, how big would the tail have been if these dealers didn't take down the rest of this auction? And I think that's where people were kind of speculating, was like, whoa, looks like the dealers were caught off guard because they let the tail get, again, they've got to bid blindly as well. And it looks like they thought this was going to get gobbled up, and it didn't. And all of a sudden, they were stuck with a lot of this.
Yeah, and those tails are long, aren't they, Joe? The inverted yield curve is just longer and longer and longer. It just continues on and on, right, Joe? It doesn't seem to end, and a huge indication as to how long a prolonged market recession or depression will be. And until they get that inverted yield curve under control, until it uninverts, right, Joe? It just paints a really bad picture, doesn't it?
I'm so glad you brought that up, because we need to talk about that. It's getting very close to uninverting. So, inverted yield curve. What are we talking about? Why does it matter? This is really important. It has been inverted. And what does that mean? The 2-year note versus the 10-year note. A normal market, right? You would get more interest. The government would have to pay more interest to get loan money for 10 years than it would to loan money for 2 years, right? So in other words, hey, the longer you allow the government to borrow money, the more you should get. When it inverts and the shorter-term notes yield more than the longer-term notes, right? That's always a sign that how long the inversion, you want to see, how long does that last? If it's a short inversion, that's okay. That means, okay, that's not too bad. But when they get long, when it goes for a year and a half, right? That's trouble. When we go back and look at where are the longest yield curve inversions in history, pretty simple. The 70s, the 87 crash, the financial crisis, the Great Depression. Those were the four longest in history up until this one. So the yield curve inversion, this is the longest it's ever been. It's essentially coming up on 2 years of being inverted. The longer the inversion, the bigger the crash. Right? The biggest inversion ever, the longest inversion ever, the Great Depression. Second longest ever, oh, you guessed it, the financial crisis. Before the crash happens, this is the kind of the cool thing about this. The yield curve uninverts. Before the crash happens, the yield curve uninverts. And guess what we have going on right now in the yield curve? We've got the 10-year note yielding 4%. And the 2-year note essentially yielding barely over 4%. Jason, we're almost at the point where the inversion is going to go away. And that always means, okay, you're on the clock now. Usually when that inversion goes away within 90 days, something breaks.
It's probably one of those things better sooner than later, because if it were to go to re-invert here, things calm down a little bit and it re-inverts, Joe, that's not good either, because it just lengthens whatever this thing is that's getting ready to hit us. And so you kind of want it to be over with, because it's already, I think it's the longest yield curve, isn't it? I can't remember historically if you're going way back, but it's in modern days, it's longer than the '08 housing crash yield curve that happened before that one.
Oh,
Joe.
yeah. Yep, longer than the Great Depression, longer than the financial crisis. It's the longest in history. Give you an idea right now, the 2-year note's at 404. So this is how close we are between the 10-year note right now. So the 10-year note, 399, 2-year note, 404. So we're right there getting ready to uninvert, and that is actually, believe it or not, that's a bad thing. A lot of people, that should be good. No. After the inversions, especially these long inversions, before the crash happens, the yield curve will uninvert. Credit spreads, that's another thing. You just take my word on it. These credit spreads are getting larger. That's not good. Right, that just means, right? We're having more problems. Liquidity is starting to dry up here. There's not a lot of liquidity in Wall Street now, so these volatile moves are happening without a lot of liquidity. And Jason, it's just a sign, and I think probably the biggest sign of them all, that this yield curve uninverting, that puts you on the clock. So you're running out of time here. How much time do you have? Not very much. Get it done. Get it done, and get it done now. It's better to be a little bit early than one day too late is just too late, Jason. That's the problem, right? One day too late is too late.
Yeah, it's better to get smarter about these things sooner than later, but it's okay if you get smarter about these things later. Just get it figured out, right, Joe? Get it figured out and start putting your money where it needs to go. I mean, these big players are, the Warren Buffett thing, right? I mean, the way that he's sold all his stuff last week, right before things got rocky, it just tells you, right? Just tells you that what these guys know much more than and they have the information they're probably not supposed to be holding on to, Joe. And that's why we get lagging numbers. We get lagging numbers. They get up to date numbers. I'm sure someone's handing them the goods, right, Joe?
Yeah, and here you go. Here's another one. Monster Energy. These energy drinks. I'm not an energy drink guy. I've never really partaken in the energy thing, but they're saying that this is the worst volumes since the beginning of the virus pandemic. You think about stuff was closed, right? I mean, you weren't buying any Monsters. Jason, these types of volumes are really what's scary because it's almost like, where did everybody go? Right? Everything, it was a little slow, and all of a sudden, everybody out there saying, man, the consumer just disappeared on us. Patriot Radio News Hour. We'll be back after the break. 800-951-0592. Patriot Radio News Hour. Joe and Jason here on this Thursday. Gold's up 30, 24.15. Silver's up 75 cents today, $27.35. Yesterday we ran $5 Indians at $700. That was $5 below a $5 Liberty. We've got 15 of those left, so if you want to take advantage online, I've already got the price back up to regular price, but if you want to scoop up some of those $5 Indians, we got about 15 of those left. Today's special, $20 gold pieces, and man, what a great price today. $25.95, $2,595. I mean, you got gold at $2,415. That's closer to spot than when gold was $2,000. That's closer to spot than when gold was $1,900, $1,800. And here's the thing. The markets are starting to heat up. I will tell you this right now. The down day Monday led to a big push and people calling about gold. We've had more new people call this week than we probably had all summer. Now, granted, summer's slow, right? People are on vacation and doing other things. The kids are home, all that kind of stuff. But if you're new, we're not like other companies. It's so easy. It's not complicated. We don't have commission salespeople. We don't call our customers. Unless you physically tell us to call you, we don't call. We don't have a phone room. People trying to sell you the highest commissioned items. No. You know what we want you to buy? The stuff we run on ad. Yeah. No bait and switch. Right, that's what a lot of these places do. They offer you something, and then you call to order it. They're like, oh, you don't want that. Well, then why the hell would you advertise it? Right? Very fast delivery. Right? We ship FedEx. For those of you, if you're not in Phoenix or Colorado, if you're not in Arizona or Colorado, and you're like, well, gosh, I don't know, the mail, we ship FedEx. 2-day FedEx, right to your door. Everything we ship's fully insured. You don't have to worry about it. If it doesn't make it to your doorstep and you didn't sign, by the way, they make you sign for it because it makes good sense, right? I mean, it's cold, so they're not going to leave it on your porch, right? And have the what do they call them? The porch thieves, whatever they're called, right? You don't have to worry about it. Porch pirates. There you go. The porch pirates. You don't have to worry about that. You don't have to worry about it. We send you your tracking number. We email it to you. If you don't have email, we'll call you with it so you can track it yourself. It's so easy. All as you do, Just call up and say, I want the special. That's it. What if you didn't hear the show? What if I'm just calling? I don't know. Hey, what's the best deal you have today? That's a great way to do it. What's the best deal you got? Because you don't know. Right? The next phone call may be a guy selling, and all of a sudden we got an item that we can sell well below. You just don't know. How about people that have gold? Listen, we buy back. Even the stuff we don't sell, we'll buy it back. Within like 1,000-ounce silver bar, don't call me. I'm not buying them. Well, I shouldn't say that. If I buy it, at $20 when silver's at $20, maybe I'll buy it. Right? Because all you got to do is ship those things back. They cost a fortune to ship. But outside of that, we buy back just about anything. If you have a lot of gold and silver, call us. We do this all the time. We do like a little partnership deal. Hey, let us retail out. We'll pay you even more. We already pay. Jason will tell you, we pay better than just about anybody out there already. But, again, this is why we've been doing it. Why have we been in business this time? I mean, we're coming up, 2025, it'll be 29 years. This is 28 years we've been doing this. That's a long time. Long, long time. Why? Because we treat everyone fairly. Listen, I'm going to tell you right now, I'm going to make a few dollars. Jason and I, right, this is how we make our living. You like this show? Order from us. You listen to it every day? Order from us. You live in a different state? Don't I find
worry. I find it interesting, Joe, when people come to sell to us and they walk in the door and I'm looking, I was like, oh, I want to sell. I'm like, who are you? People that listen to the show, but they want to buy that stuff from the internet that's cheaper. And then they're coming to us to sell because even on the stuff that we don't specialize in, we're offering a better deal. If you're one of our guys, we always treat you, like a king. We want to make sure that you guys are taken care of really well. But the guys that listen to us that don't buy from us, and they want to buy some really cheap stuff that we don't normally sell. We take care of it, right, Joe? But it's always interesting when they come walking off the street.
They don't like the answer. They don't like the answer. Oh, wait, you bought all these gold bars, and now you want to sell 1-ounce gold bars? Okay, well, first, before we do that, let's fill this form out together. What are you talking about? Yeah. This is the thing. And again, we're very, very competitively priced. I'm not too worried about any of that. But we like to stay private. Our customers like to be private. We like to be private. Our offices we're not a coin store, a pawn shop. You're not going to deal with the tweaker that just stole grandma's jewelry. Right? We try to schedule everything by appointment. So, hey, you're in here all by yourself. Sitting here with us. We're not on main streets with we buy gold signs and all that stuff. No. Just the opposite. And guess what? The government happens to view private gold differently. Right? Well, what's private gold? What are you talking about? What's private? I see. Joe, you keep saying private gold. What does that mean? Really simply, there's only one type of gold that you can buy, sell, and trade without having to worry about a 1099 and filling out forms and doing all this stuff. That's pre-1933 U.S. minted gold, period. Don't believe me? Come on into my office. I've got a big poster with all the items you can put into a precious metals IRA. You can put anything in there just about, with one exception. You can't put in pre-33 U.S. minted gold. The U.S. minted this stuff. No, can't put that in there. Why? Well, because you can sell it without a 1099. Oh, gosh. No wonder why. 800-951-0592. 9510592 Patriot Radio News Hour. Joe and Jason here on this Thursday. That $20 gold piece special just got better. Gold's up 35. All right, so spot price now $2,420. You're able to buy these $20 gold pieces $2,595. So again, if you're new, you have questions, call us. We'll gladly answer all of your questions. Here's the great thing. We're not going to pressure you. Try to force you to buy today or whatever. You got questions, ask them. Ask them. Guess what's going to happen if you don't buy and you hang up the phone? Nothing. Not a thing. Even if you gave us your phone number, we won't call you unless you told me to, right? We just don't do it. Privacy. It's a great thing. It's a hard thing to have in America anymore. Really is. When you're calling up to order, I want the special, right? I want these $20 gold pieces today. We're going to ask one really hard question. How many would you like? That's it. If you don't live close to where you want to come and pick up, we ship. FedEx. Fully insured. What does that cost? $35. You place an order in volume, we'll pick it up. We'll pay for it. Tell you what, today, how about this? Today, free shipping for everybody. There you go. I haven't done that in a long time. I blame it on Jason. It's Jason's fault because he doesn't tell me to do this stuff. Free shipping today, any order. I don't care what it is. You order a roll of dice, free shipping. You order 120s, free shipping. I want the special. That's what you say. At 800-951-0592. Now, what, pre-33 gold, what is it? Well, that was when our currency actually was backed by gold. I don't shock. Can't believe how many people still believe it is. That's the funniest part. Used to be. Do you know that the government, they couldn't go into debt unless they could find more gold? Do you know that the debt in 1933 wasn't even $100 billion when they told, oh, gold's bad. Why was gold bad? Why did the central bankers want to get rid of gold? Because they wanted to go into debt. That was it. That was the reason. They said, oh, gold, it's the Great Depression, it's gold's fault, because if we just went into debt, then it would be better. Well, guess what, guys? Now the debt's, it's such a stupid number that yet they're pretending it's all going to crash down. Why do you think a $20 gold piece is now $2,595? Because that's how bad they've destroyed the dollar. So in 1933, they shut the banks for a week. And when they reopened, everybody had to turn their gold in. Any gold that was in your bank accounts, any gold in your safety deposit boxes, they made the branch manager an IRS agent. Everybody had to open their safety deposit boxes. All the gold got taken. Of course, they paid you $20 and what was it, 62 or 67 cents? I forget, something like that. They gave you a little more. Now, granted, 60-some cents back then, that was a lot of money. People don't remember that. Put it this way. You could have taken a family that afford a dinner for 67 cents and got change. Okay? Right? Me and my wife can't go to dinner for $67 right now. I mean, I guess you could if you wanted to go to McDonald's. You could. Well, maybe, you know what? If I had my wife and my two kids and we went to McDonald's, I don't know that we could get out of there for $67. Probably couldn't. Probably couldn't do it. Most of that gold got melted down. That's what's in Fort Knox, allegedly. And I say allegedly because, well, nobody will audit it. It's kind of weird. Here's the funny thing. According to the last person that claims that they saw the gold, the former Mint director Moy, I want to say it was like 2012, something like that. He said, yes, I've seen it. And the bars, he goes, they didn't even melt them down into delivery bars, right? They're melted down, but he says the coin, you can still even see some of the coins. You can see the Liberties and the Saints and the Indians. You know, they melted them down, kind of. And he goes, he called it dirty gold. Because you got to remember, the pre-33, they had copper in the coins, right? To give it hardness, because there was people used it for money. All the rest of it was overseas. That's the gold now that with the pre-33 gold, all that remains, most of it was from overseas. Because that was the money back then.
I'll bet most of it didn't get melted. Most of it didn't get melted.
I wonder if it did. Yeah, that's the other thing. Yeah, it's kind of weird. It's a weird story. But neither here nor there. All of that remains, all the pre-33 gold that remains, is classified differently than all the other gold coins and gold bars, period. All the rest of the gold coins and gold bars are considered bullion. The old gold's considered a collectible. What does it mean? Nothing. Except one little detail. One little detail. Anything over $10,000 in bullion, $10.99 when you go to sell it. Pre-33 gold, nothing. Have a nice day. Sell me $1 million. Here's a wire. Here's a check. Have a nice day. By the way, now that it's a collectible, the only gold you can keep when they confiscated gold in 1933, oh yeah, collectible gold coins. I don't know. What kind of gold do you want to own? Patriot Radio News Hour. Final segment coming up. What's going on in the dating world? How broke is the consumer? 800-951-0592. Joe and Jason wrapping up this Thursday. How bad is it? Bumble. It's one of those dating app sites, you know. Thank God, you know what? Dating apps weren't invented before I got married. So I've never had to worry about this. But in 2001, they had their IPO. It was worth $14 billion. Bumble today trading at the lowest levels ever. Now worth less than $1 billion, said that they were expecting 8 to 11% growth. Jason, now they're saying no growth. Yeah, nobody's dating. People don't have the money. Nobody's paying. I don't know what a premium plus is. Okay, I don't know, but what they filter out the creeps and the weirdos, I don't know. But nobody's paying for the premium plus on the Bumble, Jason. Again, it looks like anything having to do with the consumer just doesn't look very good right now.
There's so many places we could talk about this thing that's not economic.
I'm so glad I'm not single, man. I'm just saying.
I'm going to say this. This may just bleed over to the next show. We'll see. But, if I was one of those snowflakes out there, shouldn't there be a protest to who is not on the premium? Who are the premium people? Isn't there some sort of prejudice going there as to who's on the premium level and who's not? Uh-oh. That's all I see. Is like, I guess premium means. Yeah. Maybe
I'm
premium means access.
Dater? I don't know. I don't know. I'm not.
All the ugly people are on the regular, and then the premium plus is where they've airbrushed everybody into looking like models.
Yes,
you know.
We'll brush up your photo, make you look better than what you really are. 800-951-0592. $20 gold pieces, $2,595 as gold's now, up $37 now. So this deal just keeps getting better here. 24.22 spot gold, and silver now up 82 cents. So here it comes, silver finally waking up a little bit, almost $27.50. The Dow up 500. Apparently, Jason, this was the right amount of jobless claims, right? 233,000 continuing claims at the new highs. We'll see what tomorrow brings. But again, I think next week the data heats up again. And I'll say this. I think expect volatility all the way to the election. Don't you think, Jason? We're probably going to have very volatile markets all the way to the election, and probably, unfortunately, all the way through all of 2025 and into 2026 because, let's face it, the amount of debt that we have to go into. I mean, we're already now closing in on $35.2 trillion. I mean, we just hit 35. That point two, that's $200 billion. I mean, look how fast it goes.
Yeah, you were talking about the debt around 1933 when gold was confiscated. So I was like, oh, what was it right before we got that central bank put in place? So I looked at the debt in 1912. It was $2.8 billion. $2.8 billion. Yeah, just 2 decades after they get their bank, it's like 40 billion, which doesn't sound like a lot, but you're talking, what is that, like 13-fold or something like that?
Yeah. Well, that's why they hated gold. Now you know. 800-951-0592, Patriot Radio News Hour. Jason and I, we're coming right back with the half-empty cup, and then we'll wrap up the week tomorrow. God bless everybody.